Stock market for beginners. Why I think it's important for everyone to learn how to trade on the stock market. First of all, we should all agree that your money needs to grow. Any savings you have has to grow past inflation. So if you have money in the bank sitting in a savings account year after year, that money loses value because what you can do with your money decreases. If you can buy what you can buy with $1,000 today, you won't be able to buy that same thing in 5 years for $1,000. It's going to increase. So everything gets more expensive. Housing gets more expensive. Cars become more expensive. Everything gets more expensive. So if your money doesn't grow at the same rate or more, your money loses value. So now, how do you grow your money? What is the easiest way to grow your money? You can invest in real estate. You can invest in a business. But all these things, you're going to have to deal with people. There's nothing wrong with that, but it's more of a headache. But if there's a way to invest or grow your money without leaving your home, without dealing with anyone, from the comfort of your own home, you can grow your money, then why not take advantage of that? So you could do that with the stock market. Banks usually offer, as investments, they offer savings account where at the big banks you get very low rates, but with Tangerine, for example, you can get 2.5% per year. It's better than the banks, but it's still pretty low. It's not something that you should rely on to grow your money. You also have GICs, guaranteed investment capital. So your capital is fixed. There's no risk of losing your capital, but you get very low interest. It's also below 2% per year. You could trade in. You can invest in mutual funds with the bank. So you go to a bank, you meet a financial advisor, and you can pick the mutual funds you want, and they'll invest your money in mutual funds. So how mutual funds work? It's a group of stocks. So because it's invested in many different stocks at the same time, your risk is lower. There's still risk, but it's much lower because you're not invested in one single stock. But whatever makes you invest in that mutual fund, why can't you look up the stocks that are in that mutual fund and invest yourself in those stocks individually? And you can even pick and choose. But in a mutual fund, you could have like hundreds of stocks in one mutual fund. So you might not like all of those stocks. But at least when you trade on the stock market, you can choose the stocks that you want to trade in. And more importantly, is the timing. When you invest in a mutual fund, you buy the mutual fund as a whole. So some of the stocks in the mutual fund can be at a high price, and some could be at a low price. But you can't choose when to buy individually these stocks in a mutual fund. So you're buying all at the same time. So you're not taking advantage of any potential gain. Because obviously, every company's goal, every stock's direction is to go up. That's the goal. But they might come to an obstacle that makes them go down. So you want to take advantage of that. Whenever a company or a big name company is trying to increase its stock price, but then bad news come out or the revenues are low or whatever the reason is, but the stock goes down, that's an advantage. That's a buying opportunity. That's time for you to buy the stock and then wait for it to go back up, collect dividends, and sell the stock and make a capital gain. And it's actually very fun to watch the companies that you like, track them and invest in them simply by clicking a few buttons on your computer. So let's say you start off with $1,000 to invest in the stock market. And you buy a stock at $10, and 3 months later you sell it at $12. So that's 20%. So your $1,000 has now turned into $1,200 while you're sitting at home. And so if you keep repeating that process, your money can grow pretty fast. And then if you keep adding more to your savings, so every year or every month you contribute $500 or $1,000 or $200, your portfolio is going to grow very fast as long as you keep making profitable trades. So I have videos on how I pick my stocks, and now that's just the way I pick my stocks. It doesn't mean it's the absolutely right way, but it's what's been working for me for the past 3 years. And I also have another video where I show my performance for the past 12 months. So the past 12 months I made 14% return for the year. And what I do is I usually buy stocks throughout the year whenever they go down, and I sell them at around whenever I can make 7% or more profit. But if I repeat the process throughout the year, so at the end of the year it adds up. I don't put all my portfolio in one place, of course, so I split it up. I usually, in one stock, I'll put from $1,000 to $3,000 per stock. It depends on the stock, and it depends on the company, and it depends on the price also. if I'm very sure, if I'm confident that it's a very low price, then I'll put a lot. I'll put 3,000. If I'm not sure it's the lowest point, but I don't want to miss the boat, so I'll put 1,000. And if it goes lower, I'll put another 1,000. But if it doesn't go lower and goes up, well then I only have 1,000 in that stock. So if you want to get started on the stock market, it's very simple. You need a brokerage, an online brokerage. So all the banks have an online brokerage, and there's also something called Questrade. It's an online brokerage. It's based out of Toronto. Everything's online. You can open an account online. You transfer the funds online via your bank as if you're paying a bill through online banking. It takes about 2 to 3 days for the money to arrive to Questrade, and then the interface is online. It's very simple how to place it. I have videos on how to place trades using Questrade, and it's very simple. The hardest part is picking your stocks and being patient, knowing which companies to buy. That's simple. You can follow the news, read online. I have a video on where I show that I look at whatever Warren Buffett holds. I look at these stocks. I watch them. I don't just buy them right away. I watch them because the timing is important. You have to buy at the right price. So I just watch these stocks, wait until they go down for whatever reason, and then by looking at the chart, when I feel like it's a good opportunity, then I'll buy it. And you can follow the companies that you like: Facebook, Apple, whatever you want. Now, the advantage of Questrade over the other banks is obviously their fees for trading is much lower. It's $5 per trade. So if you buy a stock and sell it, that's going to cost you $10. Well, actually, it's 1 cent per share, but it's a minimum of $4.95 and a maximum of $10. But if you're starting, it's most likely going to be for a $4.95 trade. So, for example, if you're starting off with $1,000. And you're buying something that costs a stock that costs, let's say you're buying Facebook, which is at 180, I believe, today. Well, you're only buying 5 shares. 5 times a penny is 5 cents, but the minimum is $4.95. So that trade is going to cost you $4.95. So to really reach the $10 trading fee, you have to invest with a lot of money. Regardless, it still has the lowest fees in terms of trading. CIBC's Investor's Edge trading is $6.95. It's also not bad, and that's fixed. Regardless of the amount of shares you buy, that's always going to be $6.95. So what I like about CIBC's Investor's Edge is if you have an account with CIBC, transferring money back and forth is so much faster. It's usually the same day. So let's say I don't have money in my investing account, but I see that there's a good opportunity to buy something, so I can transfer money from my CIBC checking account to my investing account, and it'll arrive the same day, and I can place a trade. And vice versa, I can withdraw also faster. With Questrade, when you want to withdraw your money, it takes about 2 to 3 business days to arrive to your bank account. So let's look at the pricing of Investor's Edge. $6.95 per trade. No minimum account balance, no minimum number of trades. So non-registered accounts, $0 when market balance is greater than $10,000. $100 when market balance is $10,000 or less. So I guess that's a yearly fee, but that's for non-registered accounts. Starting off in the stock market, you should definitely get a TFSA, a tax-free savings account. I have a video where I explain what is a TFSA and the importance of a TFSA. But to summarize, any gain you make on your investments will be tax-free. So because the stock market is the best place where you can make high gains, so you want to make sure those high gains are tax-free. So you need to trade on, if you're going to trade on the stock market, it needs to be in a TFSA. And luckily, I think the max that you can contribute up to date, if you haven't contributed since 2009, is about $46,000. So I think if you're starting off in the stock market, you still have room to use your TFSA. So if you're going to trade options, $6.95 plus $1.25 per contract. This is actually cheaper than Questrade, because Questrade, it's $10 per. And you can see here, Investor's Edge, they have a pricing for active traders. If you make more than 150 trades per quarter, so every 3 months, if you make more than 150 trades, they give you, it'll cost you only $4.95 a trade, so the same price as Questrade. But still, I think for $2 more, it's not a big deal. If you're more comfortable with CIBC, definitely a good brokerage account. Reason why I prefer Questrade is when you buy U.S. currency, when you trade U.S. currency, the conversion rate is better. The spread between the buy and sell is much bigger. Questrade, I think, they only charge 1.5% over the spot price, which is much better. So if you look at RBC's direct investing, their fees is $9.95 per online or mobile trade, and if you're an active trader, it's $6.95. So just if we compare RBC with CIBC is better in terms of their online brokerage account. But if you already have an RBC account and you wanna stay with RBC, when you're making 20% or when you're trading on the stock market and you're making good profits, you're not gonna care about the extra $5 or $10 per trade. I think you should, but I mean, because that's your money, $5 or $10. That it's still good money. It's still your money that should be in your pocket. Why give it away when you don't have to? But you have to look at the hassle. If you're gonna go with Investor's Edge, then you're gonna need to open an account with CIBC. You might pay fees for having an account with CIBC. So that's why Questrade is the best, because you can keep your same bank account and just trade directly with Questrade, and you just pay to transfer funds to Questrade. It's like a bill payment with the online banking. And between CIBC and Questrade, Questrade's interface is better. With TD investing, it's, as you can see here, uncompromising value. It's $9.99 per trade, $7 if you're an active trader. So between the RBC, CIBC, and TD, CIBC seems to be the best. So an important distinction to make is with the stock market. If you think you're going to make a living with the stock market, then you're more likely going to be losing money. But if you see it as a way to invest your money, to grow your money, to make a better return than just leaving your money in a savings account, then it's very simple. But people hear stories where people make a living out of the stock market, or they day trade and make thousands of dollars a month. I've never seen it. I've heard of it, but I've never seen it. I don't think it's sustainable. You can be lucky a few times, but to do it on a consistent basis, I'm only going to believe it if someone actually shows it to me. So yeah, I don't believe in the stock market in terms of making a living. I don't believe that you can make a living out of the stock market. But I do believe you can make 10 to 20 or even 30% a year from the stock market. Because I've had several trades where I've made between 10 and 30% on a single trade. But I don't put all my portfolio in one single trade. But by adding up all my profitable trades, I end up between 10 and 20% per year, which is more than a savings account, more than a GIC, more than real estate, more than the average mutual fund. So if you want to get started with trading on the stock market, you need first of all, you need $1,000. I recommend starting with Questrade, and you need to open a TFSA, that's for sure. So you go to Questrade.com, open an account. You go to Questrade.com, open an account here. It's very simple. Follow the steps here. Individual tax-free savings account. That's what you need. Some people trade with margin. That means they get a line of credit. So that means they trade with money borrowed. I definitely don't recommend that. It's very dangerous. You can lose more than what you borrow. I definitely don't recommend trading with a margin account, because you end up trading with money that's not yours, and if you lose it, you have to pay it back, and you might end up paying back more money than you actually have. So definitely stick with a tax-free savings account. Like I said, I have a video explaining the advantages of a TFSA. So just click on it, follow the steps. It's very simple. You can do it all from home. You don't have to go anywhere. You don't have to move. Everything is done electronically. So it's very simple. That's what's so great about it. It takes about, I would say, 5 business days for everything to be completed and for you to be ready to trade. And your account is only active once you fund the account. So once you open the account, you'll get your account number. You'll have to transfer from your bank account as if you pay a bill online banking. You'll have to pay that account number, $1,000, and that's how you'll transfer money from your bank account to your trading account. And it takes about 2 to 3 business days for your money to arrive to your Questrade trading account. You don't have to start off with $1,000. Of course, you can put whatever you want, but that's the minimum. Your minimum is $1,000. And if you're gonna open an account with Questrade, please use my referral code, which is at the bottom of the video. If you use my referral code, we each get up to $250. Now, if you want to see what the trading interface of Questrade looks like, just watch my other videos on Questrade. And once you're up and running, if you want to know how to pick stocks, there's so many ways to pick stocks. My way, which is, I'm not a professional, but that's what I use, and it's been working for me. I first started in 2010. I started with day trading. I lost a lot of money, and then I went into options, but I got greedy. I remember once I turned $5,000 into $14,000 in, I think, 3 months. So in 3 months, I went from $5,000 to $14,000 by trading options. And in 1 month, my $14,000 dropped to $6,000. So I was very angry and realized that getting greedy is not the way to go. So since then, I realized that it's better to invest in known companies, watch them, keep an eye on them, wait until they drop for whatever reason they drop, buy when it's low, and then sell when it goes back up again. I sell at least when it goes up 7% from what I bought it at. So I try to make 7%, at least 7% return on my trades. Sometimes I make more, but my goal is 7%, and I repeat it throughout the year. I usually don't hold on to a stock long, usually 3 months or less. Sometimes though, I'm forced to hold on to a stock longer if it doesn't go up as I predicted. I have a few stocks that I'm still holding on to because they haven't gone up, but 90% of my trades are profitable, and I have already sold. I just have 3 stocks, I believe, that I'm still waiting on, which you can also see in my other videos. You can see my portfolio. I show my complete portfolio and my trades and my orders. So yeah, I hope this video was useful for you in getting you started with trading on the stock market. If you have any questions, or if you would like to see a video about something else, please leave it in the comment. I will gladly make a video about it. If this video was useful for you, please like, share, and subscribe. Thanks for watching.